Okay, ladies and gentlemen, what I'm going to do now is talk about the scheme and give you some detail around it and how it's going to work. So, a lot of the facts, I suppose, are out there at the moment, or a lot of the information about it, but there's also some misinformation out there. So hopefully we can clarify a lot of that here today. So the scheme will be available to first-time buyers and individuals under the Fresh Start principle, and I'll talk about that a little bit later on, what the definition of that is. But really it's for those people who are seeking to purchase a newly built home, house or apartment in a private development anywhere in the country. The objectives of the scheme, as the Minister alluded to earlier, is to bridge that gap. So that gap that we've all heard about, that individuals encounter when they try to buy their first home. They have their mortgage, they have their deposit, but then they find that the cost of the new home is in excess of both. So I just have set out a small example there of a real life scenario. So we're talking here about somebody who's a couple or individual who are trying to purchase a property. The value of the new home is 320,000. So they have a combined salary of 70,000. So under the macroprudential rules, they can borrow 3.5 times their salary. That takes them to 245,000. They have their 10% deposit. That's a further 32, and that gives them 277,000. So you can see straight off there's an issue. They have 277,000. The home is 320,000. So that's precisely where the first home scheme can come in, by providing that 43,000, or about 14% in that case, of equity, where they can provide that to the couple who can go off then and buy their home. And as the Minister said, we have lots of couples around the country at the moment who are paying more on a monthly basis on rent than they are if they had a mortgage. And these are precisely the type of people that we're talking about here who could avail of this scheme. So how is the scheme going to be delivered? So the scheme will be delivered by means of an SPV, that's the First Home Scheme DAC, which has been specifically created for the purpose of delivering it. The founding members of the scheme are the Minister, AIB, Bank of Ireland and PTSB, from whom you've just heard. And as the Minister also said, it is open to other authorised mortgage lenders out there in the market. And we're very keen that we can have as many as possible people participating, or lenders participating in the scheme. The more, the better it is for everybody who is participating. A lot of the actual work, I suppose, in the last few months has been engaging with BCM, who have just been appointed. The slides slightly out of date, but BCM have been appointed as our third-party operator. So we've had, I would think it would be fair to say, thousands of hours of video calls with BCM over the last, even before my time. I'm involved in the project now 6 months, and I know it was going on long before that. And over those thousands of hours of calls, I am very confident that we've arrived at a process and a website and an application system on the website that is, I suppose, best in class, certainly in comparison to any other type of platform of its kind, but is also very intuitive and easy for the customer to navigate around. I won't go through the actual steps involved in it, but there's approximately 9 steps in the process, and the only time that anybody will have a hard copy of a piece of paper in their hand is when they're signing the contract at the very end. So it's very much digital first, with a view to the cohort of people who are actually likely to be applying here. There are people who use the internet daily in their lives, and jumping onto the internet will not be an issue for them. We will actually be able to accommodate. Clearly, there are people out there who may not be tech savvy, or who may not know their way around the internet, and there is a separate process out there to accommodate those people. But the vast, vast majority of people we expect to use the website. So how do I qualify for the scheme? Well, I talked previously about the first-time buyer. So the definition of first-time buyer for the purpose of this scheme is anybody who has not owned property previously in their own name, either in Ireland or abroad. We also talk about the Fresh Start, and that's the principle of anybody who's been subject to a divorce or separation, or indeed an insolvency process, and have lost their interest in the family home, can also avail of the scheme. So they're the 2 cohorts of individuals who can utilise the scheme. There has been some criticism in terms of the scheme about the fact that people who are better off can actually utilise the scheme. Well, that's going to be one of the mitigations or mitigants we have in place here, is that anybody who's availing of this scheme must maximise their mortgage with their lender before they actually apply the first home scheme. So if you can avail of 3.5 times your salary, and you decide you're only going to avail of 3 times, and sure, I'll top it up with the first home, that won't work. Those people will not qualify for the scheme. So you must maximise your mortgage, and it's only then the gap that's at that point that the scheme will bridge. Self-builds are not eligible at this point in time, but it's something we will keep a close eye on, and if needed, we will review that going forward. I should also have said that people can also apply for the macroprudential or MPE, where they actually get an exemption or an exception, and they can avail of more than 3.5 times their salary. And if somebody qualifies for that with one of the lenders, they can apply for the first home scheme also. But they must then decide which of the two schemes they want to avail of. They cannot avail of both. So what our advice to people at that point would be, go talk to your financial advisor, decide which scheme is best for you, because everybody's situation is different and everybody's scenario is different. So they can apply for both but can only avail of one. It applies to new home or new built homes, or houses and apartments. And in terms of what somebody can actually get, so it will be limited to 20% if you're availing of the Help to Buy scheme, or if you're not availing the Help to Buy scheme. For example, if you're somebody who might have been abroad and have come back and may not have built up the tax credits, etc., then you can avail of up to 30% of the value of the property. There will be an interactive calculator on the website, which should be live as we speak. And what you can do on that is you can go onto the website, put in your details on the calculator, and determine, based on the local authority area you're in, how much you can actually draw down under this scheme. It doesn't get into salaries or areas of your personal finance, as again has been suggested by some commentators. There is no underwriting being done by the first home scheme. If you qualify, meet the criteria, and you're a first-time buyer and you have your mortgage in place from one of the lenders which we noted, then you qualify for this scheme. So there's no underwriting being done by the first home scheme itself. The minimum equity facility under the facility is 5% or €10,000. So in essence, any property in excess of €200,000 can avail of the scheme. The maximum equity facility is determined by three factors. Firstly, the price of the home that you're seeking to buy, whether or not the customer is availing of the Help to Buy scheme. As I mentioned, if you are, it's 20%, if not, it's 30%, and the local authority area in which the property is located. Now this brings us nicely to the point of regional price ceilings. So regional price ceilings will apply, and the reason that they're applying is, again, to mitigate the risk of adding inflation to the already high inflation and house price inflation that exists in the market currently. So this is where there will be caps in place within each local authority area. And as you can see there are separate price ceilings for both houses and apartments in those areas in which apartments are available. In those areas which apartments are not yet available, there's a single price ceiling. But a very important point about this is that this will be reviewed twice annually. And if we find that, for example, the ceilings aren't working, either they're too high and they're adding to inflation and distorting the market, or indeed they're too low and people are unable to avail of them, they will be changed. So this is very much a live document in the context that we will constantly evaluate it. And again, with our colleagues in BCM, there will be huge amounts of data coming through in terms of applications and so forth. So we will be using that to see exactly where the issues are, if there are issues, and indeed if there are revisions that need to be made to the price ceilings, we will certainly do that. So how the equity share works, just a very simple example here, because there is a key point about this in terms of what people will actually owe to this scheme. And I suppose this is a point that we have been very careful that we're going to have to get across in all of our literature. So just a very simple example here. And the example here is a customer buys a property for 200,000. They're provided by 20,000 in equity from the first home scheme. So that's 10% of the cost of the home. So let's say quite a number of years down the road, and this is in a scenario where no redemptions have been made by the customer. Now the property is worth 300,000. So they still owe 10%, which is what they had on day one of the property, the value. But this is now 30,000 as opposed to 20 when the property was 200. But the corollary of that also works. So if property prices dip, and again in this scenario, the property is dropped back to 100,000, but your 10% of your 100 is now 10,000. So in that scenario, the person originally took out 20, it could potentially go up to 30 or more or less, in a scenario where house prices are increasing, or it can drop down below what they took out in a scenario where house prices are decreasing. But the important point about this is that it's pro rata to the value of the property on day one. So if I as a customer draw this down on day one and I have to pay, say in the scenario where my house has gone up to 300,000 and I end up paying 30,000 when I want to redeem it, I'm no better off or no worse off than I was on day one, because the value of my property has also increased. So on a pro rata basis, as I say, you're no better off or no worse off. And that's one of the key advantages, I think, of this scheme. So just some scheme details then. There will be no interest charged. It's an equity product. This is a very important distinction, as the Minister alluded to. After 5 years of ownership, there will be an annual service charge. Now, it's important again, there's some disinformation or misinformation out there. So a key point of the annual service charge is that it can be deferred. So it will fall due at the beginning of the 6th year of the scheme, and it will be falling due on a monthly basis. But if a customer, for whatever reason, is not in a position to make those payments at that point in time, they can defer it. And I suppose the most interesting point about that is that if they defer it, it's on simple interest. So there's no penalty. They're not paying compound interest on any deferral. And this is a key distinction and key difference from having a mortgage. There's complete flexibility around when you pay the service charge, and there's also flexibility around when you redeem the facility that you have drawn down. And as I said, the service charge is calculated on the basis of the initial capital deployed. It's not the value of the entire home. Again, I've read that out there in the media. So there are 4 scenarios in the normal life cycle under which redemption of the equity facility itself must be made. So first one of those is the sale of the property at any time post-purchase. So for example, somebody lives in the house for a number of years, their family grows, they decide they need a bigger house, they decide they want to move location, they're moved through their job, whatever it might be. So when they sell their property, they must redeem the equity at that point in time and pay any outstanding charges that may exist. So if the another scenario is if the property is no longer your principal private residence. So a scenario there might be that somebody decides to buy a second property, they live in that, and now they decide they want to rent the first property. Now that's allowable, but they must redeem the equity facility that they've been provided with. We're not in the business of providing equity for build-to-lets. The customer remortgages with a lender who's not a member of the scheme. As you know, there are currently 3 members of the scheme, and they've put quite an amount of capital into the scheme. So on that basis, it's only fair that if somebody wants to remortgage, that they must do it within the confines of the scheme. So there is choice, there is competition, but it's within the confines of the scheme. The final scenario then is the death of the owner or owners, the second owner. And in that scenario, the estate of the individuals must repay the facility or the facility. So in essence, in that type of scenario, somebody can go through their entire life and not make a single repayment to the equity either redeeming the equity or redeeming any of the charges. Now we hope and expect that would be a very rare occasion. But again, in the scenario that somebody's in financial difficulty, they lose their job, they have health issues, whatever it might be, the point here is there is no pressure on an individual to redeem or repay the service charges at any point in time in their life cycle, except when they pass away at the end, and then their estate are responsible for it. So again, another very big and distinct difference from that of a mortgage. The equity can be partially or fully redeemed at any point in time. So if somebody comes into money, if somebody has savings, whatever it might be, win the lotto, they can redeem the equity either in part or in full. In order to redeem the equity in part, you need to get a valuation, because obviously, as mentioned previously, the amount owing will be based on the valuation of the property. And they can get, once they get a valuation, they can make 2 redemptions in that subsequent 12-month period. Redemptions are limited to 5% of the original equity amount, because again, there are costs associated with doing something like this, so we don't want somebody turning up with €200 or €300 4 or 5 times a year. So that's why there's some constraints in relation to that. The scheme is not regulated by the central bank or CCPC. However, I should say there has been some very positive engagement with the central bank and CCP in relation to the scheme, and that's a relationship that we intend to maintain going forward. There will be annual statements provided to each customer on an annualised basis, and it'll be setting out examples of scenarios, because obviously we will not be able to give them the exact amount they owe, as it will require evaluation of their property, but that will be made very clear to them in their annual statement, and there will be examples provided so that they will be able to work out quite easily how much they might owe. And finally, there will be a helpline and an email query facility over the life of the project where if anybody has a query or they have a question to ask in relation to the scheme, they can actually speak with a person or send in an email and get an answer to that. So finally then, we're just moving on to the fund details. So the fund size is, as the Minister said, 400 million in the form of a fixed term loan to the SPV from the shareholders. The contribution is government 50%, as you said, 200 million, lenders combined, another 200 million. And again, as alluded, there is an ability of the fund to grow in size. So the existing members can decide to increase their capital contribution. And indeed, there's also, as we mentioned previously, an opportunity for other lenders to join. That can happen at any time from this point forward. The minimum contribution for new lenders will be 2 million, and also there will be pro rata setup costs in relation to their contribution. The deployment phase we expect to take somewhere between probably 3 and 5 years. We're resting on 4 years probably, but that will depend on the success. And we do expect this scheme to be very successful, so it may well be shorter. It is expected the scheme will assist about 8,000 individuals or couples out there to acquire a new home. And that's on the basis of just over 40,000 per scheme. So it depends really, I suppose, in terms of the amount that each facility will draw, or each home will draw down. But we expect it'll be somewhere in the region of 8,000 that we'll be able to assist. And finally then, in terms of the security and how we protect the investment, there will be an inhibition. It's a term that's new to me. So in essence, what that is a second charge. There will be a second charge put in place on the home. The mortgage lender, the senior mortgage provider, will have the first charge. First home scheme will have a second charge. So ladies and gentlemen, that concludes my brief presentation on the scheme. I appreciate it's very warm in here, so you're probably delighted that I'm finished. But with that, I'll hand you over to Kira now, who will run our Q&A session.